Well, thanks so much for joining us. I'm Marlon Bowling with you, and we're going to be taking a look at the setup for today's trade. And I want to welcome aboard Mr. Brian Hoops, the president of Midwest Market Solutions, so that we can talk about today's market activity. Right off the top, we'll just clear the air here for a second here, Brian. Everybody on Thursday expects the weekly export sales numbers, and Janet alluded earlier to the fact that the FAS administrator had sent out a message yesterday saying, well, yeah, we know we screwed up last week, didn't have the software up and working. But now they're saying we're not going to have a report today. And by the way, we're not even going to have a report next week. That's a full month of no USDA weekly export sales data. Farmers are justifiably upset with the way USDA is handling all this. Why can they not just revert back to the old system they had and just keep it working? I mean, how is that possible? I don't understand this.
Well, this is the government we're talking about, Marlon, so we know it's not going to go very well. Apparently, they are going back to their old system, but it's going to take some time to go back to that system, make sure everything is accurate. So it's going to be the 15th before we have export sales, and understandably so, and that people are upset about this. I think this certainly hurts the prices of grains. The markets don't like uncertainty, and we are seeing that uncertainty now. We're seeing some private export sale announcements like we saw again this morning, which is great, but we want to know where we stand compared to last year, where we're at compared to the USDA forecast. And so it's going to be, I think, a black eye for the USDA once again that has many, many black eyes, and they may have other things to reciprocate for from the standpoint. We still don't believe that the USDA is accurate on their carryover inventory, especially for old crop corn. When you look at the inverted nature of the futures and the really tight basis levels, it doesn't make sense we have a 1.5 billion carryout that they are claiming either.
If you Google the phrase mandatory USDA weekly export sales, you come up with a web page on the FAS website that says they are required to issue this data each week for corn, wheat, soybeans, things like that. They go right down the list, and they're required to do that. And here they're shirking their duty for a full month. It's just unbelievable how they're doing this. Okay, you mentioned an overnight flash sale. Everybody has to take everything with a grain of salt, apparently, these days. Let's take a look at what we have. It just came across the wire a little bit ago for an overnight sale. And here again, it's like they're obfuscating something. I don't understand this. Okay, it says it's not that they're reporting sales. It says private exporters reported sales of 396,000 tons of soybeans received during the reporting period. They never word it that way usually. To unknown destinations. So is it a sale? Is it a whole cluster of sales, little tiny sales that they were all unknown? Explain this one to me.
This is, again, another head scratcher. They have issued statements like this before, and it's apparently that they have received these products as imports, and now they're sending them back out as exports, is what we've been told, and that's our understanding. But again, it's a lot of confusion that really doesn't need to be in there. It's poorly worded, of course, but they have done this before. But again, this is the government that we're talking about. They can do whatever they want. There's we've seen this in different aspects of forms of government all throughout the hierarchy. It's a black eye. It's frustrating, and we just have to put up with it. This is the way it's going to be.
It's maddening, is what it is. When we are in such chaos the way it is, and I mean, we're in such short supply. There's fear of food shortages, and then you have to be shooting in the dark like this for a month straight, and it impacts everybody that works in the markets, in grain merchandising, and everything right on down the line. And now here we have another thing that we're going, well, is it a sale or is it not a sale this morning? It just gets worse as we go. Well, let's look at our overnight trade, Brian. Just to review here on the corn market overnight, our quotes are provided by bar chart here. We were lower again as harvest starts to ramp up in the southern corn belt. December corn was down 8 at 662.5 per bushel. Soybean trade overnight, it had double-digit losses. November was down 14 cents at 1408.5. In the wheat market in Chicago, December was down 5 1/4 cents at 826 1/4. In Kansas City, we had that December contract down 7 1/4 at 905 1/4. Minneapolis wheat, December was down 3 3/4 at 925 3/4. And new crop cotton, down 325 points overnight at 109.96. Brian will come back and talk more about the markets in just a moment. Don't go anywhere. We'll be right back. All right, let's take a look at our livestock trade situation and talk more with Brian Hoops. He's with Midwest Market Solutions. If we look at the livestock summary from yesterday, Brian, it looks like we had a little bit of cash cattle market activity on a dressed basis. I didn't see anything on a live basis yesterday, but fairly wide range. It looks like dress basis sales yesterday anywhere from, well, from what I could tell, maybe 227 to 234. That covers a pretty broad range. Generally, I guess it would be lower than what we had last week. What did you hear?
Yeah, that's going to be down from last week, which is kind of what the market was anticipating going into this week. With the holiday short and kill next week, packers would be buying less cattle and bidding less. So $2 to $4 lower on a dress basis, not really a surprise. There was a little bit, just a handful of trade in the Southern Plains at $1 lower. So not really enough to stay, the market, but I think we'll see more of a trend at that $1 lower developing again today. Now we get past the Labor Day time frame, and that's just something to point out is there's no trade Sunday night or all day Monday, resumes Monday evening. We'll see the packers come back in. I think they'll start to be a little bit more aggressive on their buying needs once again as numbers continue to be tight. So that should stabilize the cash markets past the holiday.
Okay, let's review our close yesterday. And on live cattle, let's take a look at the closing quotes. We were over $1 lower on the first 3 contract months yesterday. We had October finishing $1.25 lower at 142.57 on the feeder cattle trade yesterday. Here we had the September up 27, but the October was up 20 at 183.47. The deferreds from November on out were anywhere from 17 to 57 lower, though. Interesting spread activity apparently taking place there. On the lean hogs, the nearby contracts had severe losses. October down 207 and 91.52. It got as low as $91, and that seemed to hold. But what do you expect to see for opening calls in today? Anything?
We may be a little bit weaker on some follow-through selling, especially in the hog market that saw pretty good down move yesterday. Without these export sales we've been talking about, it's a little frustrating for the cattle and beef producers as well. We're very reliant, especially to China, on our pork sales, and tensions seem to be increasing with China and Taiwan overnight. So that could pressure some of the hog futures again today, figuring that they may not be able to sell as much pork to China in the near term.
Okay, well, Brian, thank you for all the information today, and appreciate all the help trying to decipher all this crazy data and reporting coming out from USDA and other sources here this week. It's been a challenge. Appreciate that. Brian Hoops of Midwest Market Solutions. So with that all being said, Janet, we're going to be getting the trade underway, whatever it is, for the first trading day of September at the bottom of the hour.